Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar. And of course, special welcoming goes to new people. Welcome to our webinars. I hope you'll enjoy it and stay with us and share this information with other people as well. And as usual, I start with a quote that traders like to use, and I think it's super relevant. You plan your trade and then you trade your plan. And this is the whole idea of this webinar, mapping out your week ahead. What we're trying to do is organize our thoughts, make a plan, make the structure, create a structure, and then follow the structure for the upcoming week. Of course, you can correct it on the way, but at least knowing what's been happening and what possibly could happen in the upcoming trading week. A few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. My overall experience in trading, it's almost 26 years. I started as a prop trader in New York City in June of 2000. It's been quite a journey. I've done the prop trading for about 11 years, and I moved on to trade in a different way. It's quite stressful to be a full-time prop trader, as some of you might know. So I also mentor and educate others, and I'm very happy that I started to be assisting our customers at AvaTrade, and I'm very happy that I have this opportunity. What we're trying to do here and what we're doing every week, this is just the info, not to bore everybody, just to explain to new people about what to expect from this webinar. So we'll speak about indices, stocks, commodities, and Forex. We'll go through some fundamental points, some screenshots of articles with a short description, and then we'll switch to the charts. We'll also go through economic calendar, take a look what's in store for us for the upcoming week. Also, we have a list of winners and losers for every week, so we'll take a look at those as well. And that's it pretty much. So let's start. Before we start, this is a risk warning. You can find the full statement at avatrade.com. Everything we do here is purely educational. We do not suggest any trades. We don't give any trade recommendations. Social media. Please feel free to subscribe and follow us on Telegram, X, and YouTube. If you are watching this on YouTube, please don't forget to click likes, only if you like it, of course, and share with people that might be interested in this. Okay, so, forgive me for my sarcasm and funny side. I always think about it that every webinar we can just finish in 5 minutes saying or pointing out the high importance. And high importance here, it's very simple. The consumers are scared, and the main reason is the oil prices skyrocketing. Just to give you an idea, according to AAA, it's a traveling agency in the States, the average gallon of fuel went from $2.98 to $3.98. That's huge move and huge hit on consumers. And no wonder the numbers that we had last week showing that consumer sentiment went down from 56.6% in February to 53.3%. That's a major drop. Here's some articles, and I like the way that they've done. This is from marketwatch.com and Barron's. If you have subscription to those, you can see these things. So here we go. Fears of prolonged oil shock grow as Iran war lurches into second month. And you have a chart here with the description. So February 28th, the attack. Then March 2nd, the Strait of Hormuz was closed. See the move of oil up. Then there was a waiver on the sanctions on Russia. We had a correction to the downside. Then nations to tap 400 million barrels of emergency oil reserves. we start moving higher again. We had a little plateau here. So blue, it's the crude oil, the US, and then the Brent is the black colors. You could see Brent is more sensitive and trades or reacts in a stronger way here. We had also on March 20th, just to give you chronological kind of history of what's happening. March 20th, we were for Iranian oil at sea, also had a little bit of a correction to downside. And March 24th, Iran allows some non-hostile vessels to transit Hormuz. We had, it looks like on the chart, if you look at it, it's a lower high here. And we actually having a little bit of a flatness here, right? So key points: the Dow Jones Industrial Average, Nasdaq Composite, and Russell 2000 all entered correction territory, with the VIX fear gauge rising 13% to over 31. Now, what's correction territory? It means that from the high, Nasdaq and Russell dropped more than 10%. Global Brent crude oil prices rose 55% to 112.57 a barrel in March, while US WTI crude increased nearly 49% to 99.64 due to supply shocks and transit route risks. Fears of inflation and consumer pessimism are growing, with a high probability of a negative second quarter for the US economy. Not a very good prediction, right? Here comes another slide here. The Iran war started one month ago. What it's meant for stocks, bonds, and oil. I don't know. My reading skills today are really, really weak for some reason. Oil prices have surged, and stocks have fallen in the month since Iran conflict began, while gold has unexpectedly declined as rate expectations shift. Key points: the closure of the Strait of Hormuz has caused Brent oil futures surge 41%, and West Texas Intermediate futures 43%. While President Donald Trump, announced a 10-day post-strike of Iranian infrastructure Thursday, higher energy prices have impacted Fed rate expectations. Stock markets declined, with S&P 500 down 5.8%, the Dow Jones Industrial Average down 6.2%. Gold futures dropped 16%. Here comes another one, which is a very serious one. If you look at the index, you forget about what's in it. It says right here, more than half of the S&P 500 industry sectors are in correction territory. How much longer until the index itself succumbs, right? When the S&P will give up and go into correction. We're still not there yet. A bruising March has left the S&P close to correction territory. Key points: the Dow Jones Industrial Average and Nasdaq Composite entered correction territory, with S&P down 8.7, very close. Another 1.3 with there as well. 16 S&P 500 industries are down at least 10%, and 4 in bear market territory, falling at least 20%, right? That's the definition of bear market, when we fall 20% below the highs. Real estate management lost 35%, and software nearly a third, while the energy sector gained 12.5% in March. Here comes Microsoft. Remember, we spoke about Microsoft's been the weakest in the group, and we'll take a look. All these things, we'll take a look at the charts when we get there. We'll just go through fundamentals first. Microsoft stock hasn't been this oversold in decades, with the tech giant really losing the AI narrative. Key points: Microsoft stock has fallen more than 31% over 6 months losing streak. It's longest since February 2009. Analysts suggest Microsoft losing the artificial intelligence narrative due to Copilot assistant leveraging Anthropic technology. Investors question Microsoft's ability to monetize Copilot, and its Office lineup faces pressure from AI technology reducing seats. Not very positive article here. Alphabet stock continues to drop. Why this analyst sees 40% upside? If you remember, if you took the group of Magnificent Seven, Google or Alphabet was the leader. Now, of course, selling, and that's what I always say. When there's a panic selling, even the strongest stocks will fall, and whereas they really rush to buy, a market is running up, even the weakest stock are going to go up. So this is the situation. Key points: Alphabet stock fell 2.3% to 274.34 on Friday. Its lowest closing price since October 2025. And a lot of stocks actually are trading around October, September of last year. Wells Fargo raised Alphabet's price target to $397, representing 41% upside, citing new profit pools. Analysts highlighted Google's licensing of GPU chips and its $32 billion acquisition of Wiz as the key to its AI winner potential. All right. Now, here's the situation. As you know, as a tradition, we put the situation on the Fed's prediction for the interest rate here. Currently, with all the war and oil and everything else, the probability of the rate staying the same, it's 95.9%. It's up from 87, and a month ago was 75. So, and remember we mentioned last week, there's some analysts actually saying that the Feds might have to hike the rates as well, with the inflation being threatened with the high oil prices. Okay, economic calendar. A few things before we go into it for new people. I think every trader should know about these things. Public info you can access through our app or WebTrader, or just Google it. There's a lot of sources. What I take here, I take only high impact events. As you could see, everything in red. You can choose and pick and choose and filter through things and check what's available for your trading or what's relevant to your trading. The times here are GMT. So Monday, CPI numbers from Germany. Chairman Powell speaks on Monday as well. Consumer price index, inflation numbers from Japan, manufacturing PMI from China, retail sales Germany, GDP from UK, CPI numbers from European Union, and manufacturing index from Japan. That's on Tuesday. Wednesday, manufacturing PMI from, we're entering April, right? April 1st on Wednesday. Manufacturing PMI from China, ADP, the first report of employment of the month. It's going to be before the NFPs on Friday, so big week, right? ADP employment numbers. Now, this retail sales report should be very, very important, as consumer confidence really went down. So this shows us the February. This shows the March numbers, right? So the whole war, month of war, should be reflected on the retail as well. So if you have to spend, as I think what I mentioned last week, if I did, I don't remember exactly, but if your oil prices went up 15-20% somewhere, and you need to choose between go buy some stuff or being able to go to work and fill up your car with gas, you take priorities. So I think retail sales here, we could see some drops. Just, a logical idea. Of course, we can't predict things. We'll see what happens. Manufacturing PMI on Wednesday as well. Trade balance from Australia, CPI numbers, inflation numbers from Switzerland. And then we enter Friday. We have PMI numbers from China. And of course, it's all about NFPs. We have the unemployment rate, non-farm payroll, average hourly earnings, and so on. So Friday is the highlight of the week as far as the numbers. And as I said, the retail numbers this time, they're always important. But now, following Friday's consumer confidence, we could see actually some reaction of the market here. Winners and losers. VIX, right? That's the fear indicator. The volatility went up with the market selling on Friday. Cotton down 3%. Sorry, these are the up the winners. Cotton up 3.19, copper up 223, wheat up 164, and crude oil up 144. As you can see, the list of losers is much larger, at least double, right? Bitcoin down 6%, platinum down 5, heating oil down 398, Nasdaq down 3.21%, cocoa down 276, palladium 271, coffee 2.6, S&P's 2.25, gold down 179, and gasoline down 151. These are the numbers for the week. All right, let's move to the charts, and we'll start with indices as usual. China index here. You could see this 50-day moving average is really crawling very close to the 200, and if and when it breaks below, the analysts call it the dead cross. For some, it's a signal to sell. Japan, we had a big drop this week. Japan index, actually in the weekly, it wasn't that much actually positive here, but the last 2 days we had a nice drop. We're still holding nicely. We're up below 100, but above 200-day moving average here. Now, as we said, Nasdaq, Dow Jones, Russell, they entered the correction territory. So you could see here. This is the daily chart. We did break, after breaking 24.5, we've been just falling the whole week. Friday was intense, closing at the lows, and we're currently trading around what I said, around the levels of September of last year. Dow Jones, similar story here. We're trading also around September numbers. As we said, S&Ps are still above that level of correction. What do we say? It was 8.7%, so another 1.3. And we'll be in that territory as well. So here, the same thing, we're trading around September numbers here. Russell, Germany, as you could see here, we did break the level of November. We tried to break above here on looks like Wednesday. Thursday continue lower. Friday accelerated selling here. UK index as well. We are kind of still holding to that trend line here that was set up a while ago, and we're still about 200-day moving average here. So out of all of indices, I think the UK FTSE is holding the strongest. French index is sitting or trying to hold into this level from September as well, 76, 70s. Also Thursday and Friday accelerated selling here. So as you could see, indices, as we said, some of them in the correction territory. S&P is getting close to it, and all the global indices are selling. UK FTSE looks like it's the strongest as of now. Moving to stocks, right? And I think it's a good idea to start with oil stocks, as they are moving higher on the oil prices. Take a look. Exxon, we said last week the Chevron was stronger, right? Exxon is catching up here with the all-time highs, it looks like it. Yeah, obviously, it's a vertical parabolic move, just flying. Chevron also continuing flying. And speaking of flying, it just hit me. You know, a while ago, it was a crisis with oil, and I could be mistaken, but I think it was Alaskan Airlines that actually didn't sell off. All the airlines sold because it cost a lot of money, right, to fuel the planes. And what Alaskan Airlines did, again, forgive me if I'm mistaken, maybe it's, but I believe it was Alaskan Airlines, was quite a while ago. What they did actually, they leveraged their losses with buying oil futures. And that's actually what happened. And that's like brings us to the point that the futures trading is being used a lot by big institutional companies to leverage the risk, right? Like as farmers are using futures to leverage the risk in the produce. Uh, some big companies using the forex futures to leverage the risk in the inventory they're holding and so on. So Alaskan Airlines, I think, they used the opportunity to buy the oil futures back then. So they lost the money in a way on the bottom line because the oil became more expensive, and the net profit shrunk, but they made money on oil. So they were doing good overall. So that brings us to the airlines. I'm going to bring the MT5 for that. So let's take a quick look. So it just hit me. If the oil is expensive, the airline should be making less money, right? So here we go. American Airline has been selling. Let's see the weekly chart. As you could see, it was 3 weeks down, 1 week correction, and last week, or this week, we just moved lower. This is American Delta Airline. Also, a lot of airlines actually stopped flying into the Middle East region. That's also a big hit. So here's Delta. Actually, Delta is holding nicely here, but looks like we entered in this possibly selling zone. So this is Delta. Let's see Alaskan Airline. Monthly chart here. Right, so this level here on 68 was the key level, as you could see here. At resistance going below. In the last few weeks, we actually had to move up on Alaskan Airlines to the upside. And this past week, we moved down halfway. Who else? We have Southwest. Southwest Airline actually went up the 2 weeks nicely, and now, let's see. And the last week was a sell-off. So just keep an eye on the airlines, right? Especially the major ones, the American and Delta. It looks like they're selling because they're exposed to a lot of international flying. Alaska and Southwest, I think they're more of a local American companies, but American and Delta, they fly around the world, including the Middle East. So it looks like a double impact. They cancel a lot of flights to Middle East, especially to Israel. And I think all the Middle East countries, due to the danger simply, and also the oil prices skyrocketing, and it's hitting them on the spending side. So just wanted to bring to your attention the airlines. We didn't speak about them, I think. Let's take a look at the whatever we call big boys. Apple is holding actually nicely about 200-day moving average here. Amazon is selling here. We had the dead cross a while ago. We're continuing approaching the support around 196. Microsoft, we said, big concern about AI, been selling. Let's see how we look on the weekly chart. In the weekly chart, if we continue lower, our checkpoint here is support around 344, 345. We just broke through 50-week moving average here. So it's selling. Google, as we said, it was the leader of the group, but also they start to sell here. So we have 200-day moving average as our reference here. We also have a support, the next support here around 270, 271. Let's see how Google stock is doing around those levels. Meta, just free fall. Here we go. Meta is free falling here. It lost 11.4% last week. I'm just reading my notes here. And it raised 172 billion of market value. This is the daily chart right here. Just zoom out. We don't have actually any strong support until, I mean, next probably it's a psychological 500 level, but technically we hear it around 480s, 470s next support as far as Meta. Tesla 361. The next strong support in around 340s. There we go. Let's take a look what NVIDIA is doing actually. NVIDIA, I believe, is holding up. The war oil is one thing, but chips needed for AI are still in high demand. Here we go. NVIDIA, weekly chart here. We're still holding this 170 level, right? We did try to break through. We're still holding it, and I think it's the only one out of any S&P stocks or any big boys that's still trading above. Sorry, that's a weekly. But anyway, in the weekly, we're trading above 50-week moving average here. We are trading below 200 daily, which is not a very positive thing. But as we said, it is holding the 170 level here. We're actually on Friday, when the market had one of the biggest drops, NVIDIA gapped up and closed higher than the opening. It's a very bullish sign. Remember, I usually speak about the relative strength. When the market is really tanking and you see the company stock or company shares that are going against the trend and showing strength, this is something to be noticed. Very, very important, because should the market turn around, of course, stock that held strongly on the really strong fall would be probably the first one to move higher. But you never know. Nothing is 100%. So NVIDIA, nevertheless, on the super down market on Friday, closed higher with the gap up. Something's happening here. So those are the big boys, right? So let's take a quick look at the banks. As we said, the banks are very sensitive to what's happening. Yes, as you could see, banks, Thursday, gap down continuation. Friday, huge gap down and continuation. JP Morgan. Goldman Sachs, similar situation, sitting right on a 200-day moving average here. Bank of America, same situation. Citigroup, same situation. So the banks, the last 3 days of the week, traded in red with the gaps and continuation to the downside. All right, those are the stocks. Let's move to commodities. And we'll go through those winners and losers really quick. Cotton, after being really accumulated a lot and then making the lows here, we've been really moving higher 3 weeks in a row. On the daily charts, you could see here, very nice gap, correction, continuation, clearly making higher lows and higher highs, which is a very good sign here. Cotton up 3.19%. Copper had a positive week, looks like it. Nothing major here. We just bounce off 200-day moving average here on copper. Wheat, also positive week here. Let's see on the weekly chart. Wheat up 1.64%. A lot of choppy trading here, but looking good. We moved higher and we have a nice consolidation. Could be that we're preparing for continuation to the upside. By the way, I've been watching a lot of things, some analysts and people that know what they're talking about. And I think one of them, don't remember the source, he said that we could be facing a big shortage of grains, wheat included, because also the shipping of not just the oil, but also fertilizers and other things that are being used in agriculture. something to think about, right? Maybe this is the beginning of that a move to the upside as a fear. So there will be wheat, corn, soybeans, maybe, but wheat. Take a look. This is the weekly chart, right? I just zoomed out. We had a double top here. We had a lot of zigzagging here, making a double bottom around this level. Then we made a higher low, and we moved straight up, breaking through the previous high, and now we're consolidating here on these current levels. So it could be somebody knows something, and we might be actually having that jump to the upside. There's a lot of space. I mean, of course, you could be having a hopeful thinking here and targeting the levels 2022 at around 1200, 1300, so on. But even if you take this level here, 712, it's $100 higher, or 750 here, it could be a good potential. But again, it's just a thought, something that we could be watching, right? So 585, it looks like it's support, and the recent high here, if we just zoomed in, was 641 and a quarter. So let's watch wheat. This past week up 164. Crude oil closing at 101. 101, right? And two pennies, up 144%. Now to the downside, we have platinum down 5%, sitting on 200-day moving average here. Heating oil look at this spikes, right? Down 4%, it tells me. I'm not sure. Nasdaq, we spoke about cocoa. Cocoa, very tricky here. Just remind us a story. This skyrocketing was a shortage of cocoa beans in West Africa, especially the main part of it, Ivory Coast. Then we went down, we made a high here, we made down again. Since we made a lower high here, we've been really sliding lower heavily. Now we came to the low here. This is the weekly chart, right? The week of February 22nd, we came low here, and the next week we bounced, and since then we're trading at the top of this weekly candle here. The big question is this time to turn around or not? So a lot of choppy things, as you could see here. We hit this 34.48. Since then we've been sliding, but not really falling, right? So in order for it to go higher, we would need to break this previous high. This back to the daily chart, 34.60s. We need to break and start establishing some kind of support. Also, that would bring a 50-day moving average kind of closer. If we break above, it could give us a signal for buying. We'll see. So that's on cocoa. Palladium, another metal, has been selling. Coffee tried a nice move. We did break above 50-day moving average here, and then Wednesday, Thursday, Friday, we sold, closing the week with 2.6% drop. Gold, as you could see here, beginning of the week started with the panicking selling here. We hit almost 4,000, 4,098.91, and we recovered. The very next day we went higher, and now we are holding. Actually, we closed right on the level of this spike down. February 2nd, we were as low as 44.0178, and we closed less than $1 around the same price. Friday was an upside for gold. About $90 moved from the lows, right? Sorry, I think I confused myself and you. So we had an opening on the level of this drop here, and then we moved higher, right? 44.02. This was the level, and we closed $90 higher. The question is, are we ready to move? Is the safe haven kicking in? What's safe haven? The panicky selling on the market when the equity is being sold, and something called risk off. So the safe haven sometimes kicks in a lot of times, and gold is number one to receive all that love / money coming in. So let's see if this is the case. So gold finished the week down, but Friday was a strong day for gold. And the last one is gasoline. We started the week on the week side, and even though the rest of the week went higher, we still closed in red. Look at this spike. Wow. So gasoline down 1.5%. All right, so those are the commodities. Let's just take a look at the other grains, see how they look. So we said wheat possibly continuing from here. Corn, same situation. We're holding nicely here after bouncing off the lows. And soybeans having, we had a drop, and now we consolidating here. Okay, we don't know. All right, so those are the commodities. Let's go to Forex, and we start with dollar. Dollar index is strong. As long as the oil is strong, and we said it every time we speak about it, the oil is being sold in dollars, quoted in US dollars. So as long as the oil is moving higher, the dollar is remaining strong. Also, the inflation, right? The inflation is growing. So the probability of the rate cut went almost to zero, and that also give strength to the dollar, right? If they cut the rates, the dollar is supposed to be weaker. If they're not cutting, it's a little bit more positive for dollar. Simple logic here. So dollar index, that brings us on the majors to the downside against the dollar. Obviously, euro, dollar is in the middle of this channel. We could be on the way to retest this level here from which we started the advanced move around 114.70s on euro. British pound, 4 days to the downside. We have a next support around 132.18. This candle right here. Australian dollar, after holding very, very strongly here, we started actually to sell this week, and we stopped right on a 100-day moving average here, and below the previous low here on 0.6896. So it looks like we are sliding here. New Zealand dollar, it's been weaker than Australian, and it's been zigzagging lower. We're approaching the level of possible support at the current levels here. Dollar Swiss, finally we did break through 200-day moving average here. Last time we were there in mid-January, where we retested and failed. As you could see, every time we came to 200-day moving average here, this was November, this was December, this was January. Every month we tried and we failed to continue. Here's the first time in a long time that we actually, on Thursday, we closed higher, and very next day on Friday with a nice move to the upside. So Swiss, it's a kind of a clear direction here. So if we continue high here, our resistance or next resistance could be at this level here, around 0.8030s, somewhere here. USD CAD looks similar to Swiss, right? We just moved higher, breaking through 200-day moving average here on CAD. Also, Thursday moved higher, Friday continuation, and our resistance is around 139.20s here. Should we reach that level, we could face some resistance. Dollar yen, it looks like we just broke through things, and we on the way, possibly retesting the highs of July of 2024. And the high here was almost 162, 161.94. We're about to possibly retest that level as dollar is continuing higher. We said that we had some CPI numbers, a lot of data this week. Let's see if that will help yen. If not, yen could continue suffering against the dollar, and we could see continuation to the upside of dollar yen. Now, euro pound, we spoke about it, I think, a couple of weeks ago when we hit this exact point of support here. And as you could see here, we are trying to break through this triple or three days in a row, really. We couldn't break this level, and it could be that we're trying to do it in the upcoming days. Let's see if that happens here. Now, in general, the yen, as you could see here, yen has been weak. Only Friday, pound went down against the yen here. Let's see the rest of the market, the rest of the currencies against the yen, how they look. Australian has actually been weak against the yen for a while now. Canadian, the same thing. Swiss, you remember we spoke about the Swiss many times when we said that we just faced triple top here, so we could be going lower. Take a look. We did break on Thursday below 50, continue on Friday. Let's see if that direction continues. Euro is strong against the yen. We're approaching the level of resistance here, 184.70s. Let's see if anything happens there. The reason I set up that level is because of this candle here. December 19th, we had a huge move to the upside, and that's the level that I set up. As you could see here, we tried, every time we tried to break that level, 1 attempt, 2 attempts, 3 attempts, we come straight back. And the last time we hit exactly to that level, 184.76. And then we established support here, 182.40s. So these are the currencies that would like to watch. Again, we have NFP numbers, we have other numbers this week. Let's see how, and of course, we will be watching the oil. I think the mood of the Feds is not going to jump in the opposite direction this week. So there's still kind of no interest rate changes coming up. Definitely not a cut. But if the oil continues higher, we could see actually continuation of US dollar, and that would adjust the other pairs. So that's as far as Forex. And of course, as promised for dessert, we'll take a look at cryptocurrencies here. We had a 2 days drop, significant drop in Bitcoin here, and then we're consolidating here at the bottom of this candle. Doesn't look so great. We are below 50-day moving average here. XRP of Ripple is trading below that line that was set up, 134.50s. Also doesn't look that promising here. So we feel that there's a pressure, downside pressure on cryptocurrencies. All right, I think we're done for today. Don't forget about social media channels, Telegram, X, YouTube. If you're on YouTube, please click those likes. It just takes you a split second and one click of the finger. Of course, if you dislike it, don't do it. But I think you could find some good information here, not to boost my ego. Please think about others. If you click that likes, it will somehow create more attention to this video, and other people could watch it, or more people could watch it. All right. So just to summarize, as we said in the beginning, we could have done just saying, you know, oil is strong. The equities are selling heavily, and the war is going on, right? So we have a lot of numbers this week. We have retail, we have NFPs, we have Powell speaking, we have war continues. I think we're in the middle of that 10-day ultimatum that used to be 5 days and then 3 days and whatever it is. So with Trump, you never know. He could wake up in the morning and just, I don't know, go into that island and just take it over. And the troops are coming closer to it. It could be anything. So let's rest. Let's have some good energy this weekend, whatever's left. Spend some good time with your families. Prepare yourself for the week. Cover your plan. Protect your equity. Have an amazing and successful week, and all the best. Take care.